Hi, my name is Kim Peterson, and I am a mortgage loan officer with KPT Mortgage Advisors. I am also a certified divorce lending professional, so I have received special training in helping people navigate the divorce process when it comes to homeownership and figuring out what's going to be the best plan for them and their housing going forward. So I wanted to address a few questions that are often asked when people are starting to think about what this might look like for their future in regards to what to do with your current home as well as purchasing a new home. One of the biggest questions I am asked, because many people have low interest rates on their mortgages and they have since risen since they obtained those low rates, is what is an assumption and can I assume the mortgage from my spouse? The answer to that question is a little bit tricky. However, in practice, typically the only loans that are assumable are government loans, which means you have an FHA loan or a VA loan. If you have either of those loans, it's quite likely your spouse could assume that loan from you, pending that they meet the requirements, and then you would no longer be on or obligated to that mortgage or vice versa. If you have a conventional loan, assumption is not a part of the mortgage note and agreement. You can reach out to your servicer to see if they would allow an assumption, but it is rare that we see something like that be successful. So, what's important in this regard when you are completing your divorce decree is to state really clearly who will be assuming the debt. So by assuming the debt, it means you're taking on the responsibility of paying the mortgage, but it doesn't necessarily relinquish the other person from responsibility. Assumptions are something that are allowed by the lender. Assuming the debt is something that is directed by the court. If one party assumes the debt, that means that they are responsible for the payment. However, that debt will still show up on both people's credit cards or credit reports. And if the payment is late, it will affect both parties' credit. So it's really important to communicate clearly if that is the plan for how you choose to proceed with your existing mortgage. Many times we will see a time requirement in place, such as the other party needs to refinance within 12 to 18 months. If that's the case, I highly recommend you get pre-approved for that refinance before you finalize the divorce so that we can confirm everything is in place and you'll have a successful opportunity to refinance at that time. You aren't necessarily required to refinance by law. However, that is the only way to remove the other spouse from title should you choose for one of you to retain the home. Another question that I'm often asked is, if I don't refinance, how do we split the equity that's in the home? And this is another thing that's really important to address prior to finalizing a divorce decree, because assets can be used in different ways and split in different ways. So as an example, I have a client right now. One is keeping the house and then the other one has a large 401k. So instead of dividing everything 50-50, they're actually reorganizing the assets so that they don't need to take anything out of the home, but the 401k is being divided differently so that each person in the end has equivalent assets. In the case of a divorce, a 401k can be divided without penalty. That process is called a quadro, and your attorney can assist and your financial planner can assist you in walking you through that part of the transaction. And the last question that I'm often asked is, when can I buy a new home? And again, this is a time when I always highly recommend going through that pre-approval process with a mortgage loan officer before you divorce. Sometimes you might need child support or alimony to help you qualify for the purchase of a new home. And each one of those are looked at a little bit differently by a mortgage lender. So if you can structure that to be the most favorable for you when you're going through the pre-approval process, that'll save you from a lot of challenge if you are already divorced and then can't go back and change the wording on that. Same applies to receiving funds from a quadro. Sometimes those funds can be set up as a trust and viewed as income. If you need to pay out equity on the home, we sometimes can find a creative way to handle that so that it's not affecting your ability to qualify for your next mortgage. Returning back to the assumption question, if the mortgage is if the debt is assigned to another spouse, the other person does not have that debt included in their calculations when they're looking to buy a new home. So even if you are still on the mortgage, if the divorce decree clearly states that the debt has been assigned to your spouse, you are no longer, or that debt is not included when we're qualifying you for a mortgage, which is really important. I hope that helps. Just a couple high level overviews of popular questions when people are going through this situation, but I'm always happy to answer specific questions, and you can reach out to me at 773-895-7340. Thank you.